Welcome to Jester Financial Technologies long-term care insurance and why you need it. When speaking about long-term care, we have to look at the demographics within inside the United States in order to see why long-term care is needed. Currently, our largest population, the baby boomers. There's roughly 76 million of baby boomers, people born between 1946 and 1964. There's roughly 10,000 retiring each day, and will continue to do that through at least 2029 as the youngest baby boomers reach the age of 65 and the eligibility for Medicare. According to the Department of Health and Human Services, out of that 76 million baby boomers, 53 million were going to need some form of long-term care, while 13 million of those baby boomers are going to need to stay inside a facility longer than 3 years. Here's something to ponder. As the largest segment of the United States population is starting to retire and is projected to have an unprecedented amount of people needing care, two questions have to be asked. Where are they going to get the care that they need, and who is actually going to provide that care? When we're speaking about where are they going to get the care they need, we just look to the according to the Kaiser Family Foundation. Currently, there are roughly 15,465 nursing facilities in the United States that are accepting Medicaid beneficiaries. Out of those 15,000 plus facilities, there are 1.6 million beds available to Medicaid beneficiaries. Unfortunately, as of 2012, 1.3 million of those beds were occupied. There's less than 300,000 beds available in the United States for those that tried to receive long-term care through the form of Medicaid, which is hiding assets or moving assets into a trust and having it within a 5-year period so they can qualify for state aid. The other issue is who's going to provide that care. One of the knee-jerk reactions is we'll just build more facilities. Well, here is the problem, as you can see from this chart. The projected supply and demand for physicians is the demand is going to be oversupply. Unfortunately, colleges and universities have not increased their enrollment for students trying to become physicians. And by 2020, with the number of physicians starting to retire, we're projected to have 125,000 person shortage in physicians within the United States. The numbers look actually even worse for nurses, according to the American Medical Association. Due to the average age of a registered nurse, as they start to retire, we're going to see a shortage of roughly 800,000 nurses by the year 2020 due to this phenomenon. And once again, colleges and universities have not increased the enrollment for care providers as well, or nurses. Thanks to the demand of needing care, along with the lack of supply, long-term care insurance is no longer about protecting assets. It is going to be the key negotiating chip to access of care. How are you going to receive the care if you cannot pay for it when we have a limited amount of beds and less supply for those that can provide the care? Those that have will get, those that don't will not. Long-term care insurance is plentiful. There's a lot of different options on how to actually provide for that. The traditional way, a standalone policy where you're purchasing coverage from a firm like One America or Mutual of Omaha. This is a standalone policy. We're going to pay premiums through the life of your contract. This particular policy provides the best form of coverage, as it's going to give a dollar amount for each day over a time frame. The issue is if you do not use the care, in some cases you cannot get the money back. You can also save money within 401h plans. These are piggybacks of the 401. They're fantastic, as you can defer money into a 401h plan, use it for yourself, your spouse, and also any dependents, which is also key to any parents or any children of parents who have not planned for long-term care. You can use the assets or the equity out of your home. A reverse mortgage from your primary residency is another fantastic way to fund your long-term care, because it gives you the option to stay inside your house or reside in your house for the rest of your life. Finally, the last two ways to fund long-term care or provide long-term care insurance are simple riders on annuities and life insurance as well. So as you're investing or accumulating assets or trying to generate an income for the remainder of your life through an annuity, you can also have a rider where you pay a fee and you can have some long-term care protection as well. This is not as powerful as a standalone policy, but it does provide something. Remember, your greatest asset is your health. And at Jester Financial, we continually like to ask, isn't it time you plan for it? For more information and a free healthcare report, please visit us at www.yourretirementcost.org. Thank you.